Have you noticed that since early October, gold price is up over 10%? Let's have a look at some technical details, but before looking at gold, as usual, I would like to start by looking at the US dollar. I drew these couple of squiggly scenarios for the US dollar all the way back in around the middle of September, mentioning that one of these scenarios was pretty likely. We see that the dollar has actually followed this red scenario pretty closely if we have seen this cycle low on the 24th of October. After all, we do see a poke below the Bollinger Bands, although the bands are not that wide. RSI has cycled through overbought to slice down below the neutral level, and there is a bit of a bounce close to the 50-day moving average. Now, to remove the lines, we see that if we've seen the cycle low on the US dollar, that would give us a cycle lasting for around 55 days. That's pretty close to its usual duration of around a couple of months, with the intermediate cycles in US dollar lasting for around a half a year or so. This has been the case and has been the history of the US dollar cycles for multiple years. So I'm placing an arrow here for a daily cycle low. If we haven't seen the cycle low there yet, dollar might give us one more dip down below this 50-day moving average to give us a true daily cycle before poking up again for a third daily cycle before dropping down into the intermediate cycle. Such a scenario might actually bring us to slightly over 2 months long for this daily cycle in the US dollar. In either case, we are pretty close to a cycle low in the US dollar. Again, there is a pretty good chance we have seen that cycle low on the 24th of October, meaning that there is a pretty good chance the US dollar is going to rally into this new third daily cycle before going down into that intermediate cycle low. And generally, what it means for gold is perhaps a bit of pain in the very short term, maybe over the next couple of weeks, before a continuation into this new intermediate cycle in gold. The intermediate cycle started over here in early October. Since then, gold price has already gained more than 10%. This daily cycle, the first daily cycle of the new intermediate cycle, so far has been going on for 24 days. Again, usually these daily cycles, the shorter cycles, last for around 1.5 to 2 months on gold. And with the RSI poking into overbought a couple of times, there is a pretty good chance that gold might actually cool down for a short while down into this short-term daily cycle low. That would align pretty well with the cycles in US dollar, where again it's rallying for a very short term. And of course, after that, as the intermediate cycle would still be young, I would expect a continuation into this new intermediate cycle rally, at least a test of this triple top around 2070, if not a break above that top in the third daily cycle. After all, at the beginning of this intermediate cycle, we had been suffering quite a lot for those who were investing in precious metals. That's a bit similar to what happened in the middle of last year, with RSI dipping far into oversold area and a bit of a positive divergence from price, which was still making lower lows. I do distinctly remember that intermediate cycle was a pretty grueling one, and back then, in the middle of last year, I was comparing that intermediate cycle to what happened in the middle of 2018, another very grueling long decline down into that intermediate cycle low. At the beginning of this new intermediate cycle, or at the end of the previous intermediate cycle, RSI has dropped far into oversold again, reaching even below the level of 20. So there is plenty of upward momentum from those bottoms at the seabed to push this submerged object higher, perhaps even a bit of a jump above this, again, triple top around 2070. So that's the most likely scenario looking at price charts. And another important metric to look at is, of course, market sentiment. Looking at market sentiment in the form of gold optimism index, we see that intermediate cycle lows historically come with this optimism index either around this green line at around the level of 30, as it happened during 2018, 2019. That's when these declines into the intermediate cycle lows are quite grueling. Those are the difficult periods. And as we do like to talk about cycles, the longer periods of a general elation and a general frustration also do cycle from one into another. And during 2020 and 2021, even the beginning of 2022, we see that intermediate cycles were accompanied with this market sentiment dropping only down to around the level of 40s, even sometimes the level of mid-50s, which was again replaced by this grueling decline into one or two intermediate cycle lows in the middle of last year. So on this background of general cycle lows and how they are accompanied by the market sentiment, our recent sentiment low around the level of mid-30s is low enough for a start of a new intermediate cycle. We've established that, and since then we've seen a pretty rapid increase in market sentiment from around mid-30s to 58 right now. So perhaps sometime over the next 2 to 3 to 4 weeks there will be a short-term, again just a short-term daily cycle low on gold with a bit of a cool down before a push higher into the continuation of the intermediate cycle rally. And as we usually do looking at seasonality, in this case it does agree with the story so far. I like to look at seasonality since 2015, since the end of that previous bear market in commodities, including precious metals. And what we see here is a very seasonal decline down into late November, early December, with a tax loss selling here being quite a big factor. This again aligns with our expectation of perhaps some sort of softness in precious metals over the next several weeks before a push higher into the Chinese New Year and into the continuation of this new intermediate cycle rally. So if you are elated with your gains in precious metals over the last few weeks, sit tight, there might be some short-term disappointment ahead. Or if you've missed this chance to load up at the intermediate cycle low, my suggestion to you is to join us at myfinanceteacher.org. What we try to do here is catch these intermediate cycle swings rather than trying to catch every short-term daily cycle low. It was time to accumulate over here in mid-August. As I mentioned in my previous videos, there was a chance that it would turn out to be the intermediate cycle low, with the possibility, as I discussed back then, of another true intermediate cycle low of a more significant poke below wider Bollinger Bands. That's exactly what happened. Again, there was another time to load up over here. If you've missed that chance, there'll be another chance coming up over the next 2 to 3 to 4 weeks. But if you don't want to keep missing those chances, make sure to join us at myfinanceteacher.org, where we discuss precious metals and much more. One of the most interesting recent publications is the best nickel report on the internet that came out just a couple of weeks ago. It truly is worth a read, if I may say so. So hit that like button and jump into myfinanceteacher.org. For now though, have a marvelous Monday. Bye bye.